Welcome back to the channel. Today we're going to take a step back, look at the overall crypto market, review what's happening on X, and break down what we're seeing across meme coins. Because for the first time in a long time, things are finally starting to feel alive again. There's movement, there's volume, there's momentum building. And no, this doesn't mean we're instantly in a full-blown bull market, but it does mean that the market is waking up. And if you've been here through the boring months, the red days, and the sideways chop, then this is exactly the moment you've been waiting for. So whether you're new to the channel or you've been watching for months, today's video is about context, positioning, and preparation. Not hype, not FOMO, and definitely not blind speculation. Let's get into it. Overall market sentiment. Signs of life. The first thing I want to talk about is the overall market sentiment. If you've been in crypto long enough, you know that markets don't just flip from bearish to bullish overnight. They transition, they grind, they tease, and then eventually they move. Right now, we're clearly in one of those transition phases. Bitcoin and Ethereum are starting to stabilize. Volatility is returning, liquidity is slowly flowing back into risk-on assets, and most importantly, we're seeing rotation. Money moving from majors into higher-risk assets like meme coins. That rotation doesn't happen randomly. Historically, meme coins don't lead markets. They follow strength. They thrive when confidence returns. And what we're seeing now is early-stage confidence coming back into the space. Meme coins are moving again. Let's talk about meme coins specifically. Toshi has been performing extremely well, and it's not alone. We're seeing strength across the board. Pepe, for example, saw roughly a 70% pump over the past week. That's not noise. That's capital moving with intention. When you see meme coins moving like this, especially after a long period of consolidation and pain, it usually tells you one thing: the market is testing risk appetite again. I want to be very clear here. This does not mean you should go all in blindly, but it does mean you should be paying attention, because markets heal quietly before they move loudly. Zooming out, context matters. Now let's zoom out. When you look at the charts from a higher time frame perspective, prices recently revisited levels we last saw around April of 2025, near the $90 million market cap range. That area acted as a major support previously, and when we returned to it, it presented an opportunity. Anyone buying at those levels would already be up roughly 50%. If you bought the December lows, you're up around 50% over the past month. Yes, you might still be down roughly 10% from higher entries, but you're up 30% in just the last week alone. That kind of movement is not something you ignore, especially when it's paired with volume increasing by over 100% for TOI. Price without volume is meaningless. Volume confirms conviction. And right now, volume is speaking. A message to holders: you earned this. To everyone holding Toshi right now, you deserve this. You didn't get rewarded for chasing green candles. You didn't get rewarded for buying tops. You got rewarded for patience. It genuinely feels like the ball is only just starting to roll, and if momentum continues, this could easily turn into a snowball effect. This is usually how it starts. Price stabilizes, volume returns, sentiment shifts, attention follows, and once attention comes back, things move fast. Bitcoin and Ethereum, the real drivers. Now let's talk about the bigger picture. Bitcoin and Ethereum are still the backbone of this market. Meme coins don't move in isolation. They move because Bitcoin and ETH allow them to. As Bitcoin and Ethereum continue to gain strength, that's when we typically see meme coins really start ripping. And why? Because when people feel confident in the majors, they're willing to take more risk. That's when capital flows down the risk curve, into mid-caps, small caps, and yes, meme coins. So even if you're focused on Toshi or other meme projects, you must keep your eye on BTC and ETH. They dictate the environment. Proper allocation. This is where most people fail. Right now, the most important thing you can do is ensure proper allocation. This is where most people fail in crypto. They either go all in emotionally, over-leverage, chase hype, or spread themselves too thin. What you want instead is intentional positioning. Be allocated in projects you genuinely believe in long-term, projects you've researched, understand, and have conviction in. I can't tell you what to buy. Nobody should. But whatever your high-conviction plays are, Your allocation should reflect your confidence and your risk tolerance. Conviction without risk management is gambling. Risk management without conviction leads to hesitation. You need both. Preparing for downside, discipline wins. Now let's address the uncomfortable but necessary topic. What if we go lower? Because that is always a possibility. If we do go lower, preparation is everything. That means getting an extra job if you need to, cutting unnecessary spending, selling things you don't need, building dry powder. Cash is a position. If the market gives you another opportunity, you want to be ready, not stressed, not overexposed, and not emotional. The best investors aren't just optimistic. They're prepared. Technical analysis, key levels to watch. Now let's get into the technical side. From a technical perspective, we're currently bouncing off a strong support zone. The next major target I'm watching is $240 million, which lines up almost perfectly with the 0.786 Fibonacci retracement level. That level matters. If we clear 240 million with conviction, the next zones to watch are 250 million, 300 million. The 300 million level is especially important. It's a known resistance zone and a psychologically heavy number. Breaking that won't be easy. But first things first. We need a clean, confirmed break above 240 million. If that happens, we reassess upside targets and market structure. Community strength, an underappreciated factor. I remain extremely bullish on Toshi, and a big reason for that is the community. Community matters more than most people realize. Especially in meme coins, Toshi has one of the strongest communities out there. My Toshi video remains one of the most viewed videos on this channel, and that's not an accident. For those of you who show up every day, you're usually the ones who make it a word to long-term viewers. If you've been watching this channel over the past few months when things were boring, painful, and slow, and you were accumulating during fear and uncertainty, you're doing this the right way. You weren't chasing hype. You weren't FOMOing into green candles. You were positioning when nobody cared. That's how real gains are made in crypto. Elliott wave analysis, two possible scenarios. From an Elliott wave perspective, there are two primary scenarios on the table. Scenario 1, the red count, bearish. This scenario suggests further downside before a larger move up. Scenario 2, the white count, bullish. This scenario suggests we've built a base and are preparing for continuation higher. Because both scenarios are possible, the smart approach is flexibility. That means keeping spot bids lower just in case the red count plays out. Avoiding emotional leverage, staying patient. For futures traders, this setup is particularly interesting, but discipline is key. Indicators, what the charts are telling us. Right now, the charts look strong. We've built a solid base around 0.00037. On the daily chart, Bollinger Bands are extremely tight. Historical compression like this often leads to large volatility. On the 4-hour chart, we've seen a MACD crossover. Momentum is shifting back to buyers. These are the kinds of signals you want to see before a breakout, not after. Sentiment, fear and greed. Community sentiment is very bullish right now. The fear and greed index has moved back to neutral, which is healthy. Bull markets don't start in extreme greed. They start when fear fades and confidence slowly returns. As we approach greed levels, that's when you need to be more cautious, not more euphoric. Final thoughts, discipline over hype. As always, this is not financial advice. Do your own research, but the setup is there. The charts are speaking, the market is waking up, and if you've positioned correctly, stayed patient, and managed your risk, this could be the phase where all that discipline finally starts paying off. If you enjoyed this breakdown, make sure to like, subscribe,